What if you had $1 million, not locked away in a vault, but actively working for you day and night? Imagine a world where your money makes money, generating a steady stream of income that flows into your bank account like clockwork. This isn't a fantasy. It's the power of dividend investing. And today, we're going to explore exactly what kind of life you could build with a $1 million dividend portfolio. Many people dream of financial freedom. They imagine a life without alarm clocks, without bosses, and without the constant worry of living paycheck to paycheck. Dividend investing offers a tangible path to that freedom. It's a strategy where you own a piece of a company, and in return for your investment, the company pays you a share of its profits. These payments are called dividends. With enough dividend income, you can cover your living expenses and truly live off your investments. But how much income can $1 million really generate? The answer depends on one crucial factor: dividend yield. The dividend yield is the annual dividend per share divided by the stock's price per share. It's expressed as a percentage. A higher yield means more income for every dollar you invest. But as we'll see, higher yields often come with higher risks. Let's explore 5 different scenarios, from a conservative approach to a maximum yield strategy, and see what kind of lifestyle each can support. We'll look at real companies, actual numbers, and the tangible benefits each approach can provide. First, let's look at a conservative strategy. This approach focuses on well-established blue-chip companies with a long history of paying and increasing their dividends. These are often called dividend aristocrats. Think of household names like Johnson & Johnson, which has increased its dividend for 62 consecutive years. Procter & Gamble has raised its dividend for 68 straight years. Coca-Cola has been paying dividends since 1893 and has increased them for 62 years running. These companies are stable, reliable, and have weathered countless economic storms. During the 2008 financial crisis, while many companies cut or eliminated their dividends, these stalwarts continued paying shareholders. Johnson & Johnson actually increased its dividend during that turbulent time. This is the power of investing in quality companies with strong business models. A conservative portfolio might also include utility stocks like NextEra Energy, which has increased its dividend for over 25 years, or Southern Company, known for its consistent payouts. You might also consider high-quality real estate investment trusts, or REITs, like Realty Income, which pays monthly dividends and has increased its dividend for over 25 years. With this strategy, you could realistically expect a dividend yield of around 4.5%. With a $1 million investment, that translates to $45,000 a year, or $3,750 a month. Now, let's put this into perspective with real-world costs. What kind of lifestyle does $3,750 a month support? According to recent data, you need about $80,829 a year to live comfortably in West Virginia, the most affordable state. That breaks down to about $6,736 a month. So, with $3,750 from dividends, you'd need an additional $2,986 monthly from other sources. However, if you're willing to live more frugally, $3,750 can work. You could afford a modest apartment for around $1,200 a month, spend $600 on groceries, $300 on utilities, $200 on transportation, and still have $1,450 for other expenses and savings. It's a solid foundation, but it might not be the life of luxury you've imagined. The beauty of this approach is safety. These companies have survived world wars, economic depressions, and countless market crashes. Your income stream is likely to be stable and growing over time. Now let's turn up the dial a bit with a moderate approach. This strategy aims for a higher yield by including a mix of dividend growth stocks, high-quality REITs, and master limited partnerships, or MLPS. Consider companies like Altria Group, which currently yields around 8% and has increased its dividend for over 50 years. Despite challenges in the tobacco industry, Altria has consistently rewarded shareholders. Or look at Verizon, yielding about 6.5%, providing essential telecommunication services that people need regardless of economic conditions. For REITs, you might consider National Retail Properties, yielding around 5.6%, which owns single-tenant retail properties with long-term leases. These properties generate steady rental income that gets passed on to shareholders as dividends. MLPs like Enterprise Products Partners offer even higher yields, often around 8% to 9%. These companies operate essential energy infrastructure like pipelines and storage facilities. They generate steady cash flows from long-term contracts and pass most of their income to investors. With a moderate strategy, you could target a dividend yield of around 7%. On a $1 million portfolio, that's $70,000 a year, or about $5,833 a month. This is where things start to get interesting. An income of $70,000 a year can provide a comfortable lifestyle in many parts of the United States. In states like Texas, where you need about $90,771 to live comfortably, you're getting close. You could afford a nice 2-bedroom apartment for around $1,800 a month. Spend $800 on groceries, $400 on utilities, $500 on transportation, and still have $2,333 for discretionary spending and savings. This means regular dinners out, perhaps twice a week. You could afford a newer used car, maybe a 2020 Honda Accord or Toyota Camry. Annual vacations become realistic. A week in Florida might cost $2,000, which fits comfortably in your budget. You could also pursue hobbies like golf, with monthly membership fees around $200. The moderate approach balances income with reasonable safety. While these companies face more risks than blue-chip dividend aristocrats, they still operate essential businesses with competitive advantages. Ready to take on a bit more risk for a higher reward? A balanced high-yield approach can get you there. This strategy incorporates a mix of high-yield REITs, covered call ETFs, and business development companies, or BDCs. High-yield REITs, like AGNC Investment Corp, yield around 12%, but focus on mortgage-backed securities. While more volatile, they can provide substantial income. Covered call ETFs like JP Morgan Equity, Premium Income ETF yield around 9% by selling call options on their stock holdings, generating additional income beyond dividends. BDCs like Ares Capital Corporation yield around 9% by lending to middle market companies. These firms provide capital to businesses that might not qualify for traditional bank loans, earning higher interest rates in return. With a balanced high yield strategy, you could aim for a dividend yield of 9%. With a $1 million investment, that's a whopping $90,000 a year, or $7,500 a month. Now we're talking about some serious passive income. An income of $90,000 a year can support a very comfortable lifestyle in most states. Even in relatively expensive states like North Carolina, where you need about $93,766 to live comfortably, you're very close. You could afford a beautiful 3-bedroom house for around $2,500 a month. Spend $1,000 on groceries and dining out, $500 on utilities, $600 on transportation, and still have $2,900 for entertainment, travel, and savings. This lifestyle includes dining out 3 to 4 times a week at nice restaurants. You could afford a luxury car lease, perhaps a BMW 3 Series or Audi A4 for around $500 monthly. International travel becomes realistic. A 2-week European vacation might cost $8,000, which fits in your annual budget. You could also pursue expensive hobbies. Golf club memberships at premium courses might run $500 monthly. Season tickets to professional sports teams become affordable. You'd have the flexibility to help family members financially or make charitable contributions. This is the kind of income that provides a true sense of financial security and freedom. You'd have the flexibility to pursue your hobbies, spend more time with your family, and live life on your own terms. For those with a higher risk tolerance, an aggressive high-yield strategy can deliver even greater income. This approach focuses on high-yield REITs, mortgage REITs, and other specialty finance companies. Mortgage REITs like Annaly Capital Management can yield 12% or more, but they're sensitive to interest rate changes. When rates rise, their borrowing costs increase while their mortgage assets may decline in value. However, when managed well, they can provide substantial income. Other high-yield options include preferred stocks from major banks, which often yield 6% to 8% and have priority over common stock for dividend payments. Closed-end funds that use leverage can also boost yields, though they add complexity and risk. With an aggressive strategy, you could target a dividend yield of 11%. On a $1 million portfolio, that's an incredible $110,000 a year, or over $9,100 a month. This is the kind of income that can truly change your life. An income of $110,000 a year can provide a comfortable lifestyle in all but the most expensive states. Even in costly areas like Virginia, where you need about $106,704 to live comfortably, you're ahead of the game. You could afford a luxury 4-bedroom home for around $3,500 a month. Spend $1,200 on premium groceries and fine dining, $600 on utilities, $800 on luxury transportation, and still have $3,000 for high-end entertainment, travel, and investments. This lifestyle means dining at the finest restaurants regularly. You could lease a luxury vehicle like a Mercedes E-Class or BMW 5 Series. Multiple international vacations per year become standard. A month in Europe might cost $15,000, well within your budget. Premium experiences become accessible. Private golf club memberships costing $1,000 monthly are affordable. Box seats at sporting events, premium wine collections, and luxury shopping all fit your budget. You could also invest in additional assets, perhaps buying rental properties or starting a business. This is the kind of income that allows you to live a life of abundance and pursue your passions without financial constraints. Finally, let's explore the maximum yield approach. This strategy is not for the faint of heart. It involves investing in ultra-high yield assets, often with yields of 12% to 15% or even higher. These investments are typically more speculative and carry significant risk. Examples might include distressed debt funds, private credit investments, or specialty REITs focused on specific property types. Some closed-end funds trading at discounts to their net asset value can provide enhanced yields through both dividends and potential capital appreciation. Business development companies focused on riskier lending can yield 12% to 15%. Energy MLPs during commodity booms might yield even more, though they can also cut distributions when energy prices fall. With a maximum yield strategy, you could potentially achieve a dividend yield of 13.5%. On a $1 million portfolio, that's a staggering $135,000 a year, or $11,250 a month. This is the kind of income that can fund a life of luxury. An income of $135,000 a year can support a high-end lifestyle anywhere in the country. Even in the most expensive states like Hawaii, where you need $124,467 to live comfortably, you have surplus income. You could afford a luxury oceanfront condo for $4,500 monthly, spend $1,500 on gourmet dining, $700 on utilities, $1,000 on premium transportation, and still have $3,550 for luxury experiences and additional investments. This means private chefs, luxury travel in first class, stays at five-star resorts, and access to exclusive experiences. You could own multiple luxury vehicles, collect fine art, or invest in rare wines. Philanthropy becomes a significant option, allowing you to make meaningful charitable contributions. As you can see, a $1 million dividend portfolio can generate a wide range of incomes, from a modest $45,000 a year to a lavish $135,000 a year. But it's crucial to remember that higher yields always come with higher risks. Companies that pay high dividends are often in less stable industries, or they may be paying out a larger portion of their earnings, leaving less room for error. During the 2020 pandemic, many high-yield companies cut their dividends. Energy companies, REITs, and financial firms were particularly affected. Before you chase after the highest yields, it's essential to do your own research and understand the risks involved. A dividend cut can not only reduce your income, but it can also cause the stock price to plummet. Diversification is key to managing risk. By spreading your investments across different asset classes, industries, and geographic regions, you can protect yourself from the poor performance of any single investment. It's also important to consider the tax implications of dividend income. Qualified dividends from U.S. companies are taxed at the more favorable capital gains rates of 0%, 15%, or 20% depending on your income level. However, non-qualified dividends, including most REIT dividends and MLP distributions, are taxed as ordinary income at rates up to 37%. This means your after-tax income will be lower than the gross dividend income. For example, that $135,000 maximum yield scenario might become $105,000 after taxes, assuming a 22% effective tax rate. It's always wise to consult with a tax professional to understand how your dividend income will be taxed and to develop a tax-efficient investment strategy. So, what kind of lifestyle can you afford with a $1 million dividend portfolio? The answer is, it depends. It depends on your risk tolerance, your investment strategy, and your personal financial goals. A conservative approach can provide a solid foundation of passive income, while a more aggressive strategy can unlock a life of financial abundance. The key is to find the right balance between income and risk that aligns with your individual circumstances. With careful planning, you can build a dividend portfolio that generates reliable income and helps achieve your financial dreams. If you found this video helpful, be sure to subscribe to Frankie Finance for more content on building wealth and achieving financial freedom. Don't forget to like this video, share it with a friend, and leave a comment below with your thoughts on dividend investing. Thanks for watching.